and thank you for joining us on Godrej Properties Q4 FY 2019 results conference call. We have with us today Mr. Pirojsha Godrej, Executive Chairman, Mr. Mohit Malhotra, Managing Director and CEO, and Mr. Rajendra Khetawat, CFO of the company. We would like to begin the call with opening remarks from the management, following which we'll have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made on today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the conference call invite shared with you earlier. I would now like to invite Pirojsha to make his opening remarks.
Good afternoon, everyone. Thanks for joining us for Godrej Properties fourth quarter financial year 2019 conference call. I'll begin by discussing the highlights of the quarter, and we then look forward to taking your questions and suggestions. We've just completed the best ever quarter in GPL's history in terms of the value and volume of real estate we have sold. The total sales for the quarter stood at rupees 2,161 crore, which represents a year-on-year growth of 105% and a quarter-on-quarter growth of 41%, despite the third quarter being the previous best ever quarter for residential sales. The volume sold during the quarter of 3.7 million square feet was by some distance the largest amount of area GPL has ever sold in a quarter. The total value of bookings in FY19 stood at rupees 5,316 crore, with the second half of the financial year contributing two-thirds of the sales for the year. I'm happy to note that we've sold more than 1.1 million square feet with a booking value of over rupees 900 crore in each of our four focus markets of Mumbai, NCR, Bangalore and Pune. This has been possible through the combination of strongly performing new launches with sales of rupees 3,062 crore and sustained momentum in sales from existing inventory, which stood at rupees 2,254 crore in FY19. In the fourth quarter at Godrej Central Park in Pune, we sold more than 700 apartments with a total area of 575,000 square feet and a booking value of 316 crore. At Godrej Aqua in Bangalore, we sold about 387,000 square feet with a value close to rupees 200 crore. Similarly, at Godrej Habitat in Gurgaon, which was launched in the last week of March, we sold more than 300,000 square feet with a booking value of rupees 178 crore. On the commercial sales front, Godrej Genesis, our project in Kolkata, registered sales of close to 200,000 square feet with a booking value of rupees 82 crore in the financial year, and we now have only about 150,000 square feet of space remaining in that project. At Godrej BKC, we sold more than 25,000 square feet with a booking value of 88 crore, and we now have only 25,000 square feet in the project left to sell. While we have made good progress towards fully monetizing our commercial inventory in BKC and Kolkata, we still have significant inventory in our Chandigarh project, and one of the focus areas for the current financial year will be to achieve 100% monetization of all our older commercial projects. FY19 has also been the best ever year for business development in terms of area added and the expected future profit from this area. We added 11 new projects with a saleable area of approximately 31 million square feet. This includes a portfolio of 6 projects with 25 million square feet of saleable area in the Pune market, making that GPL's largest ever business development deal, and we expect this deal to dramatically enhance our presence and scale in Pune. We also added 2 projects in Mumbai in the fourth quarter. The first project is located at Bandra and has a development potential of 1.1 million square feet and provides us the opportunity to develop a high-value project in one of the most desirable locations in India. The second project is located in Vashi and will yield a saleable area of 500,000 square feet. Both these projects fit into our strategy of expanding our footprint in newer micro-markets across our top 4 focus cities. Despite a very strong year for business development, we believe we can do much better still in financial year 2020, given the current market dynamics. We achieved revenue recognition at the Trees Phase 1 within 32 months, 1 year ahead of schedule, which significantly enhanced the P&L numbers for the year. Our total income for the fourth quarter increased by 133% and stood at rupees 1,200 crore. Our EBITDA increased by 327% to rupees 314 crore, and net profits increased by 271% to rupees 157 crore. For FY19, our total income increased by 57% to rupees 3,236 crore. EBITDA increased by 111% to just under 600 crore, and net profit increased by 191% to 253 crore. During the quarter, we delivered 1.6 million square feet of space across 4 cities, including the Trees here in Vikhroli, Project Godrej Oasis in Gurgaon, Godrej Prana in Pune, and Godrej Azure in Chennai. After a year of disruptions, the Indian economy is consolidating the gains from recent reforms. Never in the history of the real estate sector in India have so many significant events taken place within such a short period of time. While the initial days of the new regulatory environment saw Indian real estate going through a phase of transition, we now see an opportunity for disproportionate growth. Our sales performance has strengthened significantly in the second half of financial year 2019, and we expect to further scale our sales momentum in the financial year 20, given our exciting launch pipeline across the country, which has been significantly enhanced by new project additions. Given the liquidity situation of the sector, which has become even more apparent in light of the NBFC crisis, the visibility on business development is the strongest we've ever witnessed, and we hope to have numerous positive portfolio enhancement announcements in the coming financial year. We believe our national presence, strong brand, and robust project portfolio leave us well placed to capitalize on this opportunity. On that note, I conclude my remarks and would like to thank you again for joining us on this conference call. We'd now be happy to discuss any questions, comments, or suggestions you may have.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Puneet Gulati from HSBC. Please go ahead.
Thank you so much and congratulations. Obviously, great job done on sales and BD as well. Just trying to understand a bit on the financial side. The net worth for December 2018 seems to have been restated. Can you help me understand what's changed?
Yeah, Puneet, this is Rajesh.
Yeah.
So the Q1 net worth, what we stated was unaudited one. So at the end of the year, auditor has re-looked at the entire thing, and because of the 115, certain projects were reclassified, certain phases were reclassified. So that's where the changes happened. So like we said earlier, this is an adjustment and which, as and when the reversal of revenue which happens to 115 will start coming back, like the trees which had happened has already started contributing back to the net worth. So this will, come back over a period of time in the coming year.
Yeah, but wasn't 31st December 2018 net worth already adjusted for 115?
So it was adjusted, even in the first quarter, but like I said, it was an unaudited one. So once the final audited happened, so there were certain adjustments which auditors suggested to make. So we have made those adjustments.
Okay, great. Secondly, will it be possible to get some color on how much you would have, invested to add these new projects to your portfolio?
Well, I think our net cash flow shows that. Largely shows what has been invested in through land and approvals for the quarter.
So that is largely for these 6 projects? Yeah, the 688 crore is for the Pune and Mumbai both, or is there more to it?
The bulk of that is for the Pune project, yeah.
Okay, and there is nothing more that you need to pay for Pune?
No, there will be a link to certain approval milestones, etc.
Okay. Also, Magadi is now out, so have you been able to recover money from that partnership?
Sorry, didn't get it.
The Magadi project which you exited.
It was a DM project.
The DM project.
Cancelled.
Yeah, but there was no investment there. And
No.
Okay, great. That's all from my side. Thank you.
Thanks, Puneet.
Thank you. The next question is from the line of Abhishek Anand from JM Financial. Please go ahead.
Yeah, good evening everyone and congratulations on a great set of operational numbers. My first query will be on the slide where we mention the planned launches for FY20. Firstly, no mention of any subsequent phase in Vikhroli, so if we could get some clarity there. And secondly, we are planning to launch 15.5 million square feet, if I include the subsequent phases as well. And last year we were planning to do 14.9, so almost similar number. So, and we eventually launched 12.1. So, are we going to see similar performance, or should we expect similar performance next year, around 5,500 crores, or so just trying to see the trajectory of growth based on the launch profile.
Yeah, Abhishek, I just looked at this slide and I think there's a slight error. The Vikhroli is actually planned. I think we've accidentally put 0.2. Let me get that corrected. It will certainly be larger than that if you launch that. So I think that is a new project, and I think certainly we'll launch an area much larger than that. The total project that we're talking about, we think, would be in the range of 2.5 to 3 million square feet. Of course, not all of that would be launched, but I think the launched area would be closer to 1 million square feet. But I think that will, of course, be finalized closer to the launch timeline. So we'll have that corrected in the presentation. I think, we think it's a fairly robust launch portfolio. We certainly think it gives us the opportunity, if all of these projects happen, to go well past this year's number. And I don't think necessarily just looking at the area would be the best way to do it, Abhishek, because, we saw, for example, in FY19, although the value growth was quite small over FY18, the volume growth was very significant at 40%. So I think this year, if we have projects like Bandra and Vikhroli launching, you could again see with similar area much, much higher value. So certainly, I think if we're able to execute on all of these launches, we're reasonably confident of seeing good sales growth during the year. But of course, we don't like to give any sort of very specific guidance for that.
Sure. No, that's very helpful. Secondly, of course, as you mentioned, Bandra project, just wanting to understand, so of course, this is our first SRA project where we will be involved in. What's the status of the project? What is the status of slum rehabilitation? How much, if you are disclosing that, how much payments we have already done to the counterparty? And since we mentioned it in launch in this year, these details will be very helpful, actually.
Hi, Abhishek, this is Mohit here.
Yeah, hi, Mohit.
So we are in the design phase of the project. We are at advanced stages of design. And we are targeting to launch it within this year. So of course we are also submitting approvals very soon. On the status of slum clearance, we have the LOI, and our partner is very well known for clearing slums in record time. So we're very confident that before Diwali we should positively have the slum cleared up, and then subject to approval we would be ready to launch.
So, Mohit, just a clarification, do we require to construct, does the counterparty require to construct the SRA building and then only we will get the commencement certificate, or we will get it beforehand?
So we will get the IODs and everything before the construction of this building. Our construction will be linked to the construction of SRA building. So, it's plinth to plinth kind of working. And there also, the way we do it is we are taking control over those particular aspects which affect our development.
Sure. So we will be constructing the SRA.
There will be someone else constructing it, but cash flow is something where we will be taking control over the development.
Okay. And LOI, etc. is available with us.
LOI is already in place, and that's when we announce the transaction.
Sure. Perfect. And lastly, if I'm looking at our realization in Tranquil, our Kandivali project and trees, I see a decline, whereas there is an increase in Godrej Infinity. Especially in Tranquil, I see a material decline. So could you
decline in terms of?
In terms of realization.
See, there is two kind of inventories which is there in Tranquil project. One is facing the national park, which is a very premium inventory.
Okay.
And the other inventory is facing the slum, actually very, very negative inventory. So the pricing difference is pretty stark in these two inventories. So, it depends on which side of the stock got sold. Given that this is, last page of the launch and, we had this more of a slum-facing inventory, the realization might be lower than the previous sales. So that's as per strategy. There's nothing to worry about.
And Godrej Infinity, we saw a material jump in realization. So is there a price increase there, or again, there's a mixed change?
I don't think there's been any big movement in prices in either direction, so that must be a mix. Maybe we can get the
We'll just clarify this.
Yeah, because it's almost a 10% increase from what we reported in third quarter. So just trying to understand that. Okay, thank you so much, and I will get back in the queue for more queries. Thank you.
Thank you. The next question is from the line of Mohit Agarwal from IIFL. Please go ahead.
Yeah, hi, thanks. So my first question is, I'm trying to understand that, now that we get a lot of deals, a lot of these deals may be distressed, and trying to understand what is the distress element in this deal, how do we read that? So is it only, where all is it reflected? Is it only reflected in a higher share in the project or a lower upfront value, or have you kind of increased the IRR benchmark that you, taken? So could you give some perspective on that, that will be helpful. So what all parameters have changed? Let's say a deal which would have come 2-3 years back versus now. How has that changed and how will that reflect in our profitability going forward?
Yeah, I think, a couple of things. First of all, I think the kind of deals, the locations of the deals, the kind of developers who are willing to partner on deals is what has probably changed the most. And I think, some of these locations like Bandra, etc., we do think are fairly outstanding locations. I think the scale of the Pune deal, for example, to do a 6-project deal simultaneously, again, we think is quite exciting. We obviously do think valuations are also attractive, but we've always said that beyond the point there isn't much more we can do on valuations because also obviously our partners have to make a fair return on their investment. So I think our focus is on using this period of opportunity to improve the total share of profits that are accruing to us from these projects, to improve the quality of locations that we're entering, and to in an absolute sense increase the quantum of area and projects that we're adding to the portfolio. Of course, we will, where possible, also improve the terms of the deal, but that has, I think, a natural limit we should also understand.
Okay. And going back to a previous question on Vikhroli, so you said that, this number would be higher than 0.2 million square feet. Just trying to understand that, probably could you give a guidance or just an idea on how you could see this panning on a long term? So could you see this like a steady state, 1 million square feet kind of a number going forward? Or do you think that, so what is your sense of annual absorption of the residential or mixed use in that market, over the next 5 to 10 years?
Yeah, I think even over the next 10 years, my sense is that it will change dramatically because the 1 million square feet you mentioned could be a reasonable number for today. But our sense is that as we establish, hopefully, Vikhroli as one of the most desirable locations in the city, that itself will create more pull factor for people wanting to come here, which in turn will increase the kind of absolute sales possible here. So, if you look at it, obviously very different in some ways, but something like Gurgaon in NCR, I think has obviously completely changed in terms of what its scale is today versus what its scale may have been 15, 20 years ago. So I do think in Vikhroli we will see something similar, that both as we deliver more real estate, that we get some of these other asset classes like retail, hospitality and things going, that will create its own pull factor and allow us to further increase demand. But I think in the shorter run, I think that 1 million square feet per year on residential seems like a reasonable level to target.
Sure. Thanks, Rao. This is very helpful.
Thank you.
Thank you. The next question is from the line of Tanuj Makhija from Bank of America. Please go ahead.
Thank you for taking my questions, and firstly, congratulations on a great set of performance once again. My first question was, Godrej Properties has had a long-term ROE target of 20%. Would you say that you are on track right now to achieve a 20% ROE target in the next 3 to 4 years? And if yes, then what are the levers that would drive improvement in ROEs?
Yeah, I think broadly we do feel we're on track. Obviously, a lot of the work that needs to happen to make sure this is in fact delivered is something still ahead of us. But we do think if we look at the kind of projects we say added this year, if we look at the kind of scale-up we're seeing on the sales side, we do think those are some of the steps needed to achieve this. Similarly, if you look at the timelines in which a project like the Trees was delivered, I think quicker turnaround on the construction side is one of the key areas of levers that we have at our disposal to achieve this. I think the only things that have happened that are negative to our plan is probably some of the accounting-related issues of Ind AS 115, where now revenue is only recognized at project completion, which I think provides some natural stretch to that. Also, I think the amount of capital we want to deploy in some of the new projects having increased, as these reach revenue recognition will clearly, we think, deliver this ROE aspiration and are a critical part of delivering this ROE aspiration. But in the short term, will obviously increase the capital employed without any P&L impact. So I think those are the two of the things that could delay it slightly, but certainly we think overall the progress we've made over the last 2 years since we announced that journey and goal have been positive and well aligned with achieving it.
Great. The second question was, obviously there's been very good traction in terms of pre-sales by Godrej Properties. Are you seeing any pricing power in any of your micro markets? Could there be a case of a price rise in any of your micro markets in FY20 or?
Yeah, look, I think that will be linked to the overall market performance. I would say in most markets, we are at a premium to most of the developers in the area. Of course, that would depend a little bit in which area and what other developer we're comparing ourselves to. But I'd say typically we're certainly at a pricing premium and at a very significant volume premium. But in an absolute sense, we can't be de-linked from the market. While we can get some amount of premium, it obviously can't be stretched beyond a reasonable point. So I think we will need to wait for a market recovery to see pricing really starting to move. I think there's a good case to be made that you will see the market starting to improve this year or next year. I think we've obviously now been in 6 or 7 years of a residential downturn. You've got affordability now at the best it's been since probably 2002 or 2003, with interest rates having come down 300 basis points, people's income in the last 5-6 years probably having increased by 50%, and property prices in most places remaining quite flattish. So I think all the underlying factors that are needed for the next bounce back are probably in place. There have been some of these external shocks like demonetization first, then RERA, GST, now most recently this NBFC liquidity environment, that I think have continued to push back a recovery, and we may be still another year or two away from a recovery. But I think when it comes back is when you will start seeing obviously volumes pick up even more substantially, and you will see pricing start to improve. I think in the interim, from the company's perspective, what we're very focused on is that there's two avenues available to us for growth. I think one is obviously the sector itself growing, and we believe that that will present a huge opportunity for us over the next couple of decades as India continues to urbanize, continues to grow economically, and sees the sector continue to do very well. But in the short term, while that hasn't been happening, I think the second opportunity is the one that we're more focused on. And that's the opportunity to grow our own market share, to make sure that we're doing whatever we can to consolidate the industry, to enter as many new micro markets as possible within our focus cities. And we're relatively satisfied with the kind of progress we've made on that part of the journey over the last couple of years.
Great. If I could squeeze one more question. Could you please give us the revenue recognized and the margins realized at trees in this particular quarter? And lastly, what are the pending collections from phase 1 of trees?
So, Tanuj, revenue recognized was around 900 crores. This is the total income recognized in the quarter. And the margin is around 35 to 36% over there.
So what are your pending collections at trees?
Collection, I think the only whatever is based on the OC, that collection, because the OC has come in the previous quarter. So it should be around 10 to 15%, should not be more than that. And it is little on the outer side. It should be around 10 to 12% is what the collection pending over in phase 1, where the recognition has been done.
Got it. Thank you very much. Thanks.
Thanks, sir.
Thank you. The next question is from the line of Kunal Lakhan from Axis Capital. Please go ahead.
Yeah, hi, good evening, and congratulations on good set of numbers. Just on our strategy for Pune, I think last year we had seen some serious acquisitions there, similar to what we had done like in the NCR market in the previous years. So just wanted to understand like what's the strategy there and what's our outlook on Pune market per se.
So I think, for all of the top 4 markets, which again are from our perspective, Mumbai, NCR, Bangalore, and Pune, the goal is to enter as many new micro markets as we can. We believe in each of these 4 markets, despite now having achieved some reasonable scale, that there remains huge amounts of untapped opportunities. For example, to use Pune as an illustration, prior to this transaction, we actually had about 3 projects in Pune, and frankly not the most ideally located projects for the most part. And despite that, with those 3 projects, we had been in either the number 1 or number 2 position in terms of most residential inventory sold by developers in an individual year. So we think now with these 6 new projects, we think they're largely better located projects combined with our existing projects. That gives us an opportunity to very quickly ramp up our market share in Pune to hopefully a very significant degree. I think the goal is similar across all of these 4 markets. The quality of execution during the year was clearly different. I think this single deal in Pune made it the best city in terms of our business development performance. I think we had a decent performance in places like Mumbai and NCR, where we added very high quality locations in Bandra, in Noida and Sector 43. And frankly, in a city like Bangalore, we actually had a poor year for business development with no meaningful new project added. I think the good thing is that visibility in all 4 markets from a business development perspective continues to be very strong. The team's extremely focused on it. So hopefully we can have a better rounded year from a business development perspective this year. And I would say, overall, when we look at it at a national level, I think last year was an excellent year for business development.
Sure, that's helpful. But I'm just trying to understand, because Pune, typically absorbs about 33,000 units in a year. And we have a very serious inventory which we'll bring to the market maybe over the next 2 to 3 years. So in terms of market share, and if I look at the way the traction that we've got in the past projects, it looks like we'll have to either the market should be going up significantly in terms of absorption, or it's probably Godrej will be doing some or achieving some serious market share in the region.
I think clearly, obviously, I think for this strategy to work in any of these cities, if the market itself is relatively flattish, we will obviously have to grow market share. But I don't see that as, a very daunting task, considering that our market share in most of these markets is anywhere between 1 to 4 or 5%. So I think with our brand name, with hopefully the kind of product insights that we can bring to any new project launch, we can continue to deliver on our track record of residential launches being successful. And I don't see any reason why the market share can't even very significantly go up from current levels. And as I mentioned, when you look at a portfolio like this of 25 million square feet, you're really talking about kind of a 10-year portfolio. It's not that all of it is going to get sold, obviously, in the next 2 or 3 years. And certainly over that length of time, I would also expect to see a big contribution from the market itself ramping up.
Sure, that's helpful. Secondly, the question to Rajendra, you just mentioned in the previous comment that the margin on trees was about 25%.
35%.
Sorry, 25%, yeah. 35%.
Yes.
Okay, but it just in the March quarter, our EBITDA margin, if I exclude the other income, it's around 16 odd percent, and even the PBT margin is in single digits. And I was trying to reconcile these numbers with the Qtr4 numbers when we had actually first recognized trees in phase 1. And the margin profile back then was significantly higher than what we have reported in Q4 19. So just wanted to understand, how we should look at the margins first of all, and secondly, trees being one of the better margin projects. Does 9% PBT margin going ahead? Because considering we still have some legacy projects which could come to revenue recognition, how do you look at margins going ahead for the next year and even post that?
So, Kunal, as you rightly said, we still have this legacy project, and that's exactly what has happened in this quarter, which has pulled down our overall margin. In spite of trees giving us 35 to 36% margin, since we are unlocking the inventory as per our strategy, those inventories are getting unlocked either at the break-even or just above break-even, which is not a very great margin. And because of the 115, there has been certain re-recognition of the revenue, like BKC, 1100 crores of revenue has been re-recognized, which is at 13-14% margin. Same as, we have sold around 2 lakh square feet of Genesis, which is our commercial, which is at the break-even. So if you account for all those, the margin is pulling down. To your question on the trees was always between 35 to 40. We have always guided that the trees margin would be around 35 to 40%. So as you go towards the end of the project, towards your OC, your costs and other things get finalized. So more or less it will be around 35 to 40% because we have certain high price inventory like penthouses and all in those phase 1 still to be sold. So that would make up for the margin. And going forward, obviously, as a strategy, we have been unlocking the legacy projects, So maybe some more time we require, like, Pirosha mentioned, Chandigarh is something which we will have to take head on to unlock the capital over there. So that may also, depress our margin in spite of, some good projects, like trees giving us a higher margin. So maybe, over a period, in 2-3 quarters, we will be able to start reporting.
Yeah, hi Kunal, this is Mohit here. One of the things which you had asked for, what's going to happen in future. See, if you look at the current project profile which we are adding, the margin profile is significantly higher for these new project additions. And we feel that as these projects come into recognition, it will make a big difference in the profile.
Sure. That's helpful. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Abhinav Sinha from CLSA. Please go ahead.
Hi. The first question is on the business development part. So the scale of bets that you have taken sort of seems to have gone up. And, I mean, is there a limit that we have there as such? I mean, can we take like 1,000 crore plus bets also?
Yeah, look, I think, obviously there'll have to be calculated bets and we'll have to understand the risks and upsides from it. But yes, I think the scale of the company has also obviously gone up over the last 4 or 5 years. I think we've now, established confidence in our own abilities on a lot of these areas. And we would like to see that in a current period of opportunity where capital is very scarce in the industry, if there are the right opportunities where we think we can generate adequate risk-adjusted returns, we're certainly happy to put more capital to work.
Right. And so should we see the 2,500 crore resolution in more as an enabling one, or it can be actively utilized as such, in near term?
No, I think it's a little bit of both, honestly. I think clearly it's meant as an enabling resolution, and any actual decision on this, that if we want to go ahead with any kind of fundraising, is something that we haven't arrived at yet. A lot of it will depend on, how the market environment on the business development side is looking. I think clearly for the current set of deals and kind of normal pace of business development, we don't feel we need any kind of equity raise, and we'd obviously be quite hesitant to have an equity raise. At the same time, we've commented that we think this current period is a fairly unique opportunity that may not come again over the next 10 years. And if we're continuing to see the kind of opportunities and do believe that more will be available, we would like to consider raising some equity and, do it in a way that we're not raising it after the fact and after we've already made a huge amount of investment. So I think it's something that we'll have to keep monitoring on a quarter-to-quarter basis. For now, it's an enabling resolution, but I wouldn't rule out the possibility of us considering a raise if market conditions continue the way they are.
And gearing target at 1.5 is still, you are okay with that?
Yes.
Yeah, okay. Secondly, on the Bandra deal that we have done, so, I mean, Bandra as well as the Vashi one, are there some significant pending payments which you still have to make next year, or we are done with that?
Yes, but I think particularly on Bandra, we think that period of which that investment will be made is relatively small given the high value once sales start. And a lot of the payments would be linked to regulatory approval. So there would be significant payouts, but I think the period for recovery would be much shorter than in a typical project.
Right. And what sort of product exactly we are looking at? I mean, 50 crore apartment, 20 crore, so what's the range here?
Yeah, hi Avinav, this is Mohit here. So we are looking at a product which would sell in the market. So we are not looking at these ultra luxury products. So we are targeting product which will, I would say, work with the middle class or a premium middle class segment. And typically our product would be in the range of 5 to 10 crores kind of an apartment. So it will be, I would say affordable in the segment which we are talking about.
So broadly the 1,000 carpet remains the ceiling as such, 1,000, 1,200 carpet.
Yeah, you're not too far away from that number.
Okay. And then finally, on the sales itself, so we had a very high skew of 2H, right, in FY19. So what are we expecting, and any sort of early bird projects that you have for the financial year? Thanks.
So we've been laughing internally that we don't want to have the same kind of first half this year as we did last year. I think it's put unnecessarily high burden on the second half. I think very happy that the team was able to deliver against that high burden, but I think we'd much rather start with a bang this year. So as of now, I think first half visibility looks very strong, but of course still linked to some regulatory approvals and so forth. And there will be some projects that are clearly the big ones that will be in the second half, like Bandra, Vikhroli, etc. But I think visibility is pretty good for H1 this time.
Okay, thanks and all the best.
Thank you.
Thank you. The next question is from the line of Parvez Akhtar from Edelweiss. Please go ahead.
Hi, good evening, gentlemen, and congratulations for a great set of numbers.
Can you be a bit loud, please, Mr. Akhtar?
Yeah, hi. Good evening, gentlemen, and congratulations for a great set of numbers. So just one question from my side. Apologies if I missed it, but would it be possible to get the pending in commercial inventory in Kolkata and Chandigarh?
Sure. So Calcutta is another 1.2 lakh to 1.5 lakh square feet. Chandigarh is still 4.5 lakh square feet of inventory to be sold. And BKC, as Pirosha mentioned, is another 25,000 square feet of balance inventory to be sold.
Sure, sir. Thanks. That's it from my side, and all the best for future.
Thank you.
Thank you. If we move to our next question, we'd like to remind our participants to limit their question to 2 per participant. If time permits, you may join the question queue for any follow-ups. Thank you. The next question is from the line of Manish Jain from Gormal 1. Please go ahead.
Yeah, hi. My question was primarily on Mumbai as a focus market, excluding Vikhroli. Given the kind of launch that one can expect from Bandra, do you see a similar kind of BD pipeline in Mumbai? I'm just trying to look at, do we have kind of visibility the way we did Pune kind of deal? Because Mumbai so far has been a little bit of laggard within the 4 focus markets as far as the BD side is concerned.
Yeah, I think that's probably a fair assessment, Manish. I think we also feel that Mumbai performance last year could have been stronger, both from actual sales perspective. BD, we actually do have some stuff at a fairly advanced stage and a lot in the pipeline. So I think we're confident of bringing that to a fairly high level. And certainly I think a lot of the deal flow right now is actually in Mumbai, which we're quite excited about. And I think unlike perhaps, a couple of years ago, some very exciting locations within Mumbai. So hopefully we can have some more good news on that front in the coming quarters.
And second was looking at the outstanding deal terms in Pune on a large volume and value of deal. If that's the kind of trend that we are looking at, and we've clearly seen 2,500 crores you just mentioned earlier in the call, I think is 20% ROE, don't you think is a very conservative number? I understand that, when these projects get launched and there's a transition phase where equity gets issued earlier. But on a sustainable basis, on an existing 2,500 crore net worth, and we are planning to raise 2,500 crore, even though it's an enabling resolution. Do you think?
First of all, I really don't think we're planning to raise 2,500 crore. It is an enabling resolution. Even if we were to raise, I highly doubt we would look at raising that kind of quantum. On the ROE thing, while obviously I wouldn't say 20% is the absolute maximum that can be achieved in the business, I think that's a very fair and I think aspirational level to get to. I think if we are able to get there over the next 3-4 years, I think that would be a strong achievement. And we think that could be a very self-sustaining value creation engine if we can combine that 20% ROE with the kind of scale we're aspiring to. And certainly once we get there, I don't think anyone's going to stop pushing ourselves to look at further improvement. But I do think that seems like the appropriate kind of midterm goal that we've set. And again, we'll obviously continue to keep pushing ourselves to do better.
Great. I'll join back the queue.
Thanks a lot, Manish.
Thank you. The next question is from the line of Manish Gandhi as an individual investor. Please go ahead.
Hi Pirosha, Mohit, Rajendra. Congratulations on all the front. My first question is, so Bandra is our second project in slum redevelopment. Though we don't do the slum part, but I would like to know, is there any big opportunity for us opening in this kind of slum projects, which earlier may not be there, and Mumbai, most of the land which you are planning in a city-centric, so slums are the big opportunity there. Just want your views on that.
Yeah, hi Manish. Mohit here.
Yeah.
So Manish, we are looking at actively in opportunities both in open land, in redevelopment space, and also in SRA space. Of course, we enter into the project with a clear strategy that all of the risk related to SRA or redevelopment is kind of mitigated. So that strategy would continue even going forward. And in case there are opportunities within the SRA space which meet our risk guidelines, we'll be very happy to look at them.
Okay, but do you feel that this kind of market has given you entry in, which seemed like a difficult to enter or crack that thing,
So we don't want to expose ourselves to the SRA business assets. We would want to focus on development of the SRA business, and we would partner with good partners like we have done in past on these SRA projects.
Okay, very good. And my last question, second question is, so what is your view on student housing and co-living space? With enhanced activity you see in this space, and most of the players talking about adding thousands of beds capacity in next 1, 2, 3 years. And we know what has happened to the commercial real estate in WeWorks of the world. So do you feel it will help clear inventory for the sector in next 2, 3 years, which we might not have thought? I just want your views on that.
I think these are good concepts which are at early stage. So I think it's difficult to make a very specific comment about whether it is student housing or co-living as a concept, how much it can take up. We are also evaluating some of these things internally and talking to partners to see if in some of our projects can we look at doing some of these interesting concepts. But I would say it's at a concept stage, Manish. Still needs to be proven before we can really take it them to a large scale.
Okay, fair. Thank you very much.
Thank you.
Thank you. The next question is from the line of Nimit Kala from Edelweiss. Please go ahead.
Hi, thanks for taking my question. Firstly, congratulations on a strong quarter and a strong year indeed. So most of my questions are already answered now. Only one question. We've been hearing on some issues with respect to disbursement to local builders. So just wanted to understand, if at all it is going to affect our projects under the DM model.
No, I don't think, so what we do is we make a provision into our DM agreement, that the project has to be funded by the DM partner, by the landowner. And as and when we launch, we have a escrow mechanism whereby the monies are separately kept in the escrow so that the project construction doesn't get suffered, So obviously there is a stress in the market, but as of now I don't see that we will have that issue of, funding to the DM project.
Okay, that's helpful. That's it from my end.
Thank you. The next question is from the line of Saral Bhansali from Inam Investments. Please go ahead. Saral Bhansali, line is unmuted. You may please go ahead.
Hello?
Yeah. You may please go to the question, sir.
Yeah. Hi everyone. Sorry, I was just, I couldn't hear you guys. So, I had a question on Vikhroli. You talked about the incremental 2 million square feet that we are talking about in the next phase of launch. So, I understand that now, the 35 acres that we own out of the whole Vikhroli land parcel, how much of this 2 million is going to come on that land parcel and how much of it will be under the DM agreement?
Yeah, so this new land parcel that we're talking about is going to be under the DM arrangement, and all of this new project is under that structure.
Okay, and it will continue like that in the foreseeable future. Is that correct?
Yeah, that's the current understanding.
Okay, just one more question, about the fact that under the Godrej brand, we are selling products which are, let's say this Bandra project, and we are selling projects in Chembur and in other micro markets which may be at very, very different price points. So have we ever considered using sub-brands or a strategy to differentiate the markets based on the price points that we are selling at?
Yeah, we have considered it. In the past we've thought having a single brand and sort of differentiating the project level brand makes the most sense. Interestingly, we're actually currently at the outset of a major marketing study where we're having some external support also in addressing just this question. So we're revisiting that question and we'll hopefully have an answer in the next few months. I think there are pros and cons to both strategies. So we'll have to find the right mix for us, but that is something we're kind of studying at the moment.
Okay, great. And good luck for the next year.
Thanks very much, sir.
Thank you. The next question is from the line of Dhaval Samaya from Phillip Capital. Please go ahead.
Hi, good evening and congratulations for a good set of numbers. I was just trying to get a flavor of which Prana and Azure getting realized in FY19. I would like to understand the breakup of that 14 crores of profit and loss from JV partners. So what would be the Azure's contribution and Prana's contribution?
This is a share of profit. Like, there are projects, which are under profit sharing, whereby we would get only our share of profit into our, P&L. So it's a summation of all my JV projects, yeah, so there is and all the marketing expenses which because of the Ind AS has to get expensed out, those get expensed out. So, so this is, the net is what keeps coming to the P&L. So that's why there is a negative, for all the new launches which has been there into this JV project.
Okay. So going forward with more of the profit sharing projects getting OCN getting recognized, we will see this number substantially going up in the next 2 years.
Absolutely.
Okay. Thank you. Thank you very much.
Thank you.
The next question is from the line of Manoj Dua as an individual investor. Please go ahead.
My call and congratulations for a very good decent number. So what do you see the role of market revival in this Godrej performance taking what do you see, how much is the role of market also reviving, or market is still not reviving at this stage?
Yeah, I don't think the market itself, frankly, if you're talking about last year's numbers, has contributed much. I think the market remains up even towards the end of the year if we're looking at it from a sector perspective. But as we highlighted, including earlier on the call, I think there's two opportunities that GPL can benefit from at the moment. One is the overall sectoral growth, and while that has been non-existent in the past 3 years, we think that will be a very strong contributor to growth over the next few years. But the second opportunity that has very little to do with the market is how our own execution is doing, how our own portfolio addition is going, how our own efforts to gain from consolidation and improve our market share is going. And I think most of the sales performance that you've seen in the last 2 years is reflective of that we think we've done a good job of adding new projects, bringing those projects to market, improving our market share. But certainly it would be exciting to start seeing both those factors contributing at the same time.
Great work. And secondly, can you give some color on, I know Mumbai has, every location has different demand and supply. Can you give some color on what's the demand scenario in 5 to 10 crore in Mumbai presently?
So, Manoj, it's difficult to answer this question on a price band basis, because it depends on the location. But I think if you're talking about Bandra or South Mumbai, then in this price segment, there is a sufficient demand.
Okay. Congratulations and best of luck. Thank you.
Thank you.
Thank you. The next question is from the line of Himanshu Zaveri from Dhruv Gems. Please go ahead.
Yeah, hi. Congrats on a great set of numbers. I just wanted to ask regarding the Panvel project, as from what I see, we are only launching around 5 lakh a year, 5 lakh square feet. And is there any particular reason why we are going slow on this project? And what is the news on the extra FSI in that project?
So, hi, Himanshu, this is Mohit here.
Yeah.
So we are, looking to evaluate whether we should transition to the new ITP policy which has come in, which significantly gives the FSI benefit. So that's the reason we are, currently launching limited phases, and then this is the final call on that subject. We will take the, the next call on this project.
Yeah, because from what I see, if we launch more also, we can sell easily because the project is like selling.
That's correct. But I think there is a huge FSI benefit which is coming. So we're just evaluating the trade-off basis that.
Okay. And what are the new projects we are looking at? That Chembur Arcade Studios one, I think we are closing that deal, I guess. And the Delhi Ashok Vihar one, the article which had come in the newspaper, is there anything over there, or is it just till we don't confirm, we don't comment on it?
So right now, I would like to refrain from commenting on both of these transactions because we haven't signed them. That's so once we have clarity, we can come back on this thing.
Okay. And the last one, I would just like to understand as a company, we are doing what we are doing different, as in the current liquidity scenario. It's quite pretty tight, and most builders are finding it tough even to sell their ready projects. So from what I see, we as a company, apart from our brand, we are like selling even immediately as we launch the projects also. What are we doing different as a company apart from our brand which we have already built?
Yeah, I think, I don't think there's any one thing, Himanshu. I think it's a combination of things that hopefully we're getting right, from everything from selecting the right locations after understanding things like infrastructure and supply-demand dynamics in that location, to spending a lot of time figuring out what the right kind of product is through our own research and our own understanding from our other projects. And then obviously over the years we've also built a strong sales engine in the company, both in each of the projects, but at a city level, national level, and even through our international sales efforts. So I think that certainly contributes. But I really don't think it's any one factor. It's a combination of all of these. Some of the areas we've spent a lot of work on, for example, during the last financial year, was in focusing on net promoter scores from all our existing customers, working to improve that, working to make sure that we're sort of the best regarded developer in the country from a customer's perspective. We think some of those factors, if we are able to get right, will really be bigger drivers of future performance than any of the kind of short-term operational or financial indicators. So I think it's a lot of different things but that tend to revolve around kind of focusing on getting the right product for the customer and the right service experience overall.
And in trees, can I expect any deal like the Vikhroli trees land which we bought before some time? Because the main profit driver would be if we buy some more land in this land parcel rather than the DM model, because I know the current structure is for the DM model, but in future, is there any chance, or you can't comment right now?
I think the best is to assume that the current DM model, obviously, if there's a way to improve things in the future, we'd always look at that.
Okay. Thanks, Pirosh.
Thank you.
Thank you. The next question is from the line of Tanuj Makhija from Bank of America. Please go ahead.
Hi, thank you for the follow-up question. Just one quick question. In the current stress scenario for the entire sector, would you be open at acquiring a developer or per se any under construction project?
I think the answer is probably yes to either of those, but I think with a very high degree of caution and conservatism built into it. So it's more likely that we'll continue to see projects that are pre-construction being added. But certainly, if we're seeing the right risk-reward balance, we can also look at opportunities that are under construction, and we have seen such projects, and including some of the ones that we've added historically. And on the entity level, again, it's something we're open to, but we'd be very cautious about it at the same time.
Great. Thanks. That's very helpful.
Thanks, sir.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
I hope we've been able to answer all your questions. If you have any further questions or would like any additional information, please do reach out and we'd be happy to be of assistance. On behalf of the management, thanks again for joining us today.
Thank you very much.